Hey everybody, hope everyone's doing well and had a good day. This is a recap of the Emini 5-minute chart for Friday, February 14th, 2025. I want to keep it brief and just, instead of a bar by bar, go over the day as a whole. And I want to talk about the daily chart really quickly before we get into today. Yesterday was a really strong looking bull trend bar on the daily chart. And that's good for the bulls. But when we think about what we expect after that kind of bar in this environment being a very tight trading range, I thought the odds were the bulls would be disappointed with their lack of follow through today. So I was expecting sellers above yesterday's high and some sort of disappointing day for the bulls, whether that means it's a smaller bull day or a trading range day or even a bear day. But I was not expecting another bar like yesterday on the daily chart. And so we had that disappointing day today. We have maybe two legs up on the daily chart. One, pullback. Two, the second leg subdivided into two legs of its own. And you know, what does Al say about second legs in a trading range? You have to be ready for second leg traps. So that's the problem with being long up here. So going into the day, I have yesterday's high drawn blue. Again, expecting sellers above. And we ended up rallying on the open. But look at the quality of the rally. Just look at the bars. We have bars with relatively small bodies, big tails, tails above bars, lots of overlap. We know this is a channel on a smaller time frame, even though it's a spike from bar 2 to bar 5, because these are trending lows. It's all one simple leg, but the reality is bar 2 is a spike, and then we have a channel from 3 to 5. This is a spike and channel on a smaller time frame. Strong enough for a second leg. We had this deep pullback on 7. If I remember correctly, I think it was about a 68% pullback. And that's disappointing. If you're a bull and you bought anywhere, and then you have a 68% drawdown, that's from the bar 2 low to the bar 5 high, down to the bar 7 low. That's about a 68% pullback. And that's disappointing enough that there may be sellers at the new high. We may be transitioning into a trading range, if not some kind of broad channel, because you don't get 68% pullbacks in strong bull trends. So we did rally to a new high, but now it's 2 or 3 legs up. Maybe you count bar 78 as leg 1, pullback, leg 2, maybe up to bar 5, deep pullback, and then leg 3 on bar 8. And bar 8 looks like a strong bull bar, but why are we getting the strongest bull bar after so many weak-looking bull bars? And that's a sign of exhaustion when you get a strong-looking bar late in a rally. So after 2 legs up on the open, we then got bar 9. And bar 9 is a bar that always in bulls probably exit below, especially because of the deep pullback here. And really, this might be an expanding triangle on a different time frame. We broke out above, broke out below, breaking out above again, but getting bad follow through. So the bulls broke out to a new high on bar 8, but did not get follow through, and that's disappointing. And you can call it a higher high, major trend reversal, but whatever you call it, the bears ended up getting a decent breakout down to 15. This was 2 legs down. We pulled back on bar 12, but the 2 legs are tight enough that you know it's a breakout on a higher time frame. If you look at the 15-minute chart, this is simply a breakout, and there was actually no pullback from here to here. But we finally got a pullback up on bar 18. And you can see when the market is in a trading range, you can see how I talk about how the market's fractal and everything is 2 or 3-legged patterns, where you get a breakout, a pullback, and then a second leg, sometimes a third leg. And you can see that in trading range days. Bear breakout, deep pullback, strong enough that the bulls will probably get a second leg. But remember, you have disappointed bulls above. Any trader who bought the close of 8 trapped on bar 9. So the bulls did get a pullback in a brief second leg. But again, the problem with second legs in trading ranges is you may have a second leg trap. You can call this a nested second leg trap too. Maybe the rally up to bar 8 is leg 1, deep pullback, leg 2 up to bar 20. And of course here, 18, pullback, 20, 2 legs up. Testing, resistance. And then we got this breakout down to bar 23. Now the breakout down to 23, I'm still thinking about and working on when to reset the leg count. And I'm also really hesitant when resetting the leg count when the market is in a trading range, because I really want to be counting legs when the market's in a trading range, because every breakout is minor and it tends to reverse after 2 or 3 legs. So the breakout down to 23 might be leg 2, might even be leg 3, depending on how you draw it, maybe from the low of 7, 15, and 23. However, we had this breakout down to 15, and that's a bear trend on a smaller time frame. And then the bulls broke that trend line. And whenever there's a trend line break, I'm thinking maybe we reset the count after a trend line break. And as far as, is this a major trend reversal on a smaller time frame? Bear trend, trend line break, retest. Well, the retest is certainly stronger than the bulls would have wanted to see. And if you compare the strength of the bear breakout to the bull breakout, the rally is weaker. Lots of overlapping bars. It's a spike in channel compared to a breakout down to bar 23. So yes, it might be a late leg, but because of the trend line break, I'm thinking, hey, we might reset the leg count here. And this looks like it's strong enough for its own second leg. We know there are trap traders above. And again, this is an example of how the market is fractal, moving in two-legged patterns. Bear breakout, pullback up to bar 24, and then a second leg up to bar 30. And that's about a leg 1 equals leg 2 measured move. There's other resistance. You can say we're testing yesterday's high after breaking below it. You can say we're testing a breakout point, maybe the bar 19 low, just about the same price. But again, after 2 legs up, after a stronger looking bear breakout, let's clear this up and just look at the breakout on bar 30. What's the problem with bar 30? And forget about yesterday's high. The problem with bar 30, there's a couple things. First of all, it's a second leg, and that's a late leg in a trading range. Leg 1, and it's really a 2-legged pullback. 1, pullback 2, again, fractal. So leg 1, pullback, leg 2 on 30, and then just look to the left. And whenever you have a bull breakout, but you look to the left and you're still within a bear breakout, it's really dangerous to be buying here. And if you're buying, you need momentum. And so say you buy the close of 30, or you're long for any reason, betting that the bulls get the breakout. Well, first of all, bar 29, it's a bull reversal, so you can call this a reversal and follow through. But bar 31 or bar 29 did not even break out above the high of 28. So we're still below the prior bar's high on 29. 30 finally breaking out of some minor resistance, but again, still below here. Testing close to the bar 21 low. And again, maybe the bar 19 low or the bar 17 low. Somewhere in this area, there's trapped traders because of this bear breakout. It's important to think about price action. At least I think it's important to think about price action in this way, in terms of breakouts and second legs, because you put yourself in the shoes of really any trader. We talked about this before. There's 2 main groups of trapped traders when you have a breakout. So reversal and follow through, 21, 22, more follow through, 23, trapped traders above. Who is trapped? You have bulls who bought for any reason. Maybe they bet that 20 is a weak sell signal, tight bull channel. You buy, you scale in and try to make a profit. but obviously 21 through 23 traps you into either a really deep drawdown or a losing trade. So the bulls are trapped into a losing position here. The bears, for whatever reason, they don't sell because maybe the probability is not yet high until you get the breakout. So bears who did not sell, they're trapped out of a winning position. Then you have the bears. This is the third group, and this is part of these are traders that took the trade. You have bears short but did not trade as big as they would have liked, and then they get good follow through and they're thinking, man, I wish I traded larger, so I'm going to scale in on a pullback because I know there are trapped traders above, and those traders are desperate to sell at a higher price. The bulls holding a losing position, hoping they can exit at break even. After you see this, the bulls are probably hoping they can exit at break even on the entire trade. And I like to look at stop orders and just see. If you're a bull and you bought above bar 20 and you scaled in, who knows, maybe you bought more above bar 23. This is your average price. So you basically take the worst fill, you buy up here, you buy more on a stop here, here's your average price. The market would have to get here to allow you out at break even. You can see you came close on 30. But again, remember I said, if you're long, you really need momentum after bar 30, and 31 is not momentum, and that leads to a give up bar 32. So the bears get their second leg, and again, you can call it 3 legs, maybe 1, 2, 3. And down here, this is a nested wedge because you can see 3 pushes down here, 3 pushes here, 33, 37, 39. So a lot of reasons to either be flat or long somewhere down here. Really dangerous to be short because you know the odds are after 3 legs, you're expecting, after 3 legs down, 10 bars and 2 legs, sideways to up. And especially on a trading range day when you're not expecting the bear channel to last all day long. Here's a bear channel. And the bulls get a breakout of the bear channel. Remember, bear channel, it's the same as a bull flag. So bulls get a breakout of the bear channel on 41, minimum follow through 42, stalemate for 5 or 6 bars. But think about what we have leading up to this stalemate. 3 legs down, nested wedge, and then a strong reversal and follow through, or a breakout and follow through, 40, 41, second leg up likely. We're still expecting 10 bars and 2 legs, sideways to up, and at this point, maybe it's close to 10 bars, but only 1 leg up. And again, here's another leg 1, leg 2 measured move. So we're testing resistance once again up here. We're high in the range on a trading range day. What does Al say? Buy low, sell high, scalp. Trying to rescue the bulls who bought the bar 20 close or above bar 20. After 2 legs up, the bulls start losing momentum. And sure, strong enough rally, 53, up to 53. The bulls should get a small second leg. Well, they got it, and that's bar 57. You can say it's 55 through 57. We get a test of the high close, and then a give up bar 58. You can see the traders who bought here disappointed with the pullback. Again, if you're buying in an area of resistance, you're betting on a bull trend, and you need all of the resistance that you see to be, you need resistance to be failing, because in a trend, all resistance fails. If the market is stalling at resistance, your premise is invalid. You need momentum, you're not getting it. Now there's a 3 bar bear micro channel, second leg down likely, sellers above likely, and already 2 legs up to the top of the trading range. So 58 is another one of those always in bars. If you're long, you get out below 58, and it's okay to sell below 58 for a swing. And the bears got decent follow through. Reversal, follow through, more follow through on 60, and even more on 61. 4 bar micro channel, sellers above likely. And in this case, we got a spike in channel from 58 to 61. That's the bear spike. We pulled back. That's the beginning of the channel phase. The bears are still likely to get a second leg down, but with a spike in channel, the second leg is often weaker than the first. You have a strong trend in the form of a breakout, a pullback, and then two-sided trading begins. And in here, there's more directional probability, but through here, it's more between 40 and 60%. And the bulls and bears take turns. We have buyers at new lows, sellers above highs. We really stayed in this channel all the way down to the end of the day. So that's going to be it for today's price action review. Thanks everybody for watching, and I hope everybody has a great weekend.